Okay, so we are doing question past test 2, 2019, right? So we just did question 1 in the last session, and there they asked us to do the general journal to record the disposal of an asset. Then they asked us to do the asset disposal account in the general ledger, and then they asked us to do the property, plant, and equipment note. But this is all going to be uploaded before the end of the day, so you guys will have access to it. Or let me say tomorrow morning, latest, you will have that on the YouTube channel. So then you can obviously refer back to that. So in the second question, okay, let's go to the required. They say, prepare the statement of profit or loss and other comprehensive income for the business for the year ended 28 February 2019. Okay, so here, before that, they've given us the pre-adjustment trial balance as at 28 February 2019. And here they also inform us the following information relates to the business at the end of the current financial year. The business uses the periodic inventory system to track inventory and is not a registered VAT vendor. Okay, they use the periodic inventory system. Right. Cool. So here you can see all you then need to do is to put together your income statement or your statement of profit or loss. All right, so there you got your sales, you've got your sales returns. Okay, all these things, they weren't any real adjustments. Okay, maybe let me read the adjustments and then we'll go through the actual statement. So if we look at the adjustments, can you guys see though? Okay, right. So the first one, they say a physical stock take revealed that trading inventory on hand amounted to 75,000. Okay. Now, if we look, did we have trading inventory here? We didn't. But it also makes sense that we didn't because we are on the periodic, isn't? So basically, they were just informing us as to what our closing inventory or stock or trading inventory was. Okay? So we go on. Because usually, if we're on the perpetual, we already do know our trading inventory, isn't? And therefore, when we see we did a stock take and it was worth 75,000, we're actually seeing is the amount in our books what it is on the pre-adjustment trial balance under the perpetual, but now we're under the periodic. So anyway, just take note of that. So we've got 75,000 there. Then they tell us the loan from ABBA Bank, all right, is interest free, and the total capital amount of the loan will be repaid on 1 September 2019. When are we doing this for? 28 February 2019. So how is this relevant? This 1 September 20, it's outside our financial year, isn't it? Because our financial year obviously ends 28 February 19. So they're now telling us about 1 September 19. It's out of our financial year. Why are we interested in this then? What is the relevance? Accrued expense. No, it hasn't fallen due. It only falls due on 1 September here at this point. So the relevance of this is when we look at our ABB loan, this 300,000, it's due within how many months? 9 months. It's due within 9 months, which is less than 12 months, right? Is this a short term or long term? Short term. So this 300,000 would need to then go to your current liabilities. Does that make sense? And not your non-current. Okay. So just be mindful of that. I don't know if they've asked us. Let's see if they asked us in the second part. They say prepare the current liabilities. Okay. So can you see? And that's where I called this ABSA, but it's actually supposed to be ABB. Okay. Right. So there you can see the 300,000. That was the relevance of it. Can you see that? Okay, but it has no relevance for the profit and loss. Okay, but let's go on. Here now they say rent of 5,000 has already been paid for March, which again is outside of our financial year. So all we're doing is we go to rent expense and we're deducting that 5,000 because we only want the stuff that pertains to this financial year. Okay, so the previous balance was obviously how much? 33,000, then minus 5,000. So our rent expense should be 28,000. Okay. Then we go to the next one. An amount of 51,000 must be provided for depreciation on equipment. Okay. So obviously what we need to do is we need to account for depreciation on equipment. Okay. We know that depreciation is what type of account? So it should affect our income statement, isn't it? And if we look at the information that they've given us, we don't have any other depreciation. So this was all that we needed to do. Just plug in that 51. If you look here, there's no depreciation under your nominal accounts. Okay. Then we go on and it says it was realized that the repairs to equipment for 3,000 made during the year had been debited to the telephone account. So if we've debited it to the telephone account, what does it mean about this telephone amount here? Is it more than or less than what it should be? It's more than what it should be. So we need to reduce that. So telephone needs to be reduced by 3,000. Repairs. Where's our repairs account? Repairs and maintenance. There you see 3,000. Did we have a repairs and maintenance prior? We didn't. Okay. So that's all you needed to do with that adjustment. Then here, an amount of 500 owing by a debtor must be written off as irrecoverable. So this is obviously credit losses or bad debts, whichever one you prefer to call it. So here is our bad debts expense, 500 Rand. Okay. And then obviously that's going to decrease your debtors, but we were not doing our debtors here. Okay, we were just strictly focused on income and expenses in the profit and loss. Then it goes on to say, create an allowance for credit losses to the amount of 3,000. An allowance for credit losses. Create. So here they told you to create. So if we wanted to just double check, because sometimes they just say adjust allowance for credit losses. And then you need to determine, was it already created or do I need to create it? Okay. So you need to check, do I have an allowance for credit losses? If so, then you're adjusting. If it's not there and they said adjust, that means you're now creating. Does that make sense? So creating is easy because we know allowance for credit losses adjustment is either an expense or an income. But when we're creating, it's always going to be an expense. Okay? And then allowance for credit losses is the asset, negative asset. But here again, we're only focused on income and expenses. So allowance for credit losses adjustment, there you can see it, and there's your 3,000. Guys, at any point if you have a question, feel free to ask. Ne? Okay, there we go. Number 8. An amount of 1,000 has been recovered in cash from a debtor who whose account had been previously written off. No entry has yet been made. Yes. So what is this going to affect? What accounts are affected here? Bank, yes, and debtors control. Are you sure? Are you sure? Are you very sure? Nope, not provision for bad debts. Here we're receiving money. So it should be bad debts recovered or credit losses recovered, isn't it? Okay? Because remember, when we wrote this person off, we said, we're not going to get the money from OBS. We've tried everything, calls, we're wasting our time here. Let's just write this off and move on. Okay? So there is no account in the debtors where we would then credit this to. Does that make sense? So here you can see under, you could have had it under other income, but it's also fine if here I see how they did it is they just said negative, less, they reduced their expenses. So reducing an expense is like also getting an income. Doesn't make sense. But typically you would have it under other income somewhere here, under other income, and just said bad debts recovered or credit losses recovered. And then you're fine. But it's fine if you do this as well. It's fine. Right. So sorry, I need to be going up to see this last adjustment. An amount of 4,000 for water and electricity used in February 2019 has yet to be paid. So what is that? We have water and electricity that hasn't yet been paid for February, which falls within our financial year. It's an expense. Yes. What type of expense? So firstly, water and electricity is going to be affected, right? We need to obviously include this 4,000. Okay. So speaking to your point of the expense account that's affected. What's the other account that's affected though? Accrued expense. We are owing, right? Accrued expense. So here, obviously, we're only concerned with water and electricity. So we're adding it to the previous balance of 40,000, giving us 44, and that's what we're plugging in our income statement. Okay, then you obviously just do your calculations and you get your net profit or your net loss in this particular instance. Any questions there? Straightforward, not too bad, eh? I think they were kinder here. They were a little bit kinder. The first question was, yeah, they were really testing you guys. So here, let's see now. 2.2, what are they asking? Prepare the current liability section in the statement of financial position. So you see, they can ask you, remember I told you guys, they can ask you any one of those financial, or they can ask you a portion of any one of those financial statements. They ask just for the current liabilities. So here, if you can't go to your pre-adjustment trial balance and identify what are current liabilities here, if I have a negative, here you had to determine that you had a negative balance on your bank account by basically looking at the fact that this is your credit side. And we know bank typically, if it's favorable, should have a debit balance. So can you see here, they did a very good job of assessing you guys. Do you know your story? Because they're asking very different stuff. So that's where that 95,000 is coming from. What's 95,000 up there? I don't recall seeing 95,000. Okay. I see 45,000. Was there an overdraft? Let's see. Maybe in the notes there. I think maybe I answered this question with the wrong amounts initially. Yeah, but it should just be the 45,000 because I don't see anything that alluded to alluded to an overdraft or anything to that effect. So this should be 45. 45,000. Okay. Then creditors. Go back. What was on our creditors? Did we have anything? Creditors 74. Okay, so copy and paste there. Then this 300 loan, we spoke about it earlier. Because it's within 12 months, then it's obviously going to fall under your current liabilities. Okay, then the accrued expense. We know accrued expenses is a liability. We owe this money for electricity and water, but we haven't yet paid it. So now it has become a current liability. And that, ladies and gentlemen, was your 2019 test 2. Okay, test 2. Any questions before we move on? We're fine. Okay, right. So let me just